Assalamualaikum and hi everyone. Today we will discuss about plantation mitigation. First, for question A, we have to separate the oil palm trees from fresh fruit bunch. The trees are classified under the MFRS 116 as barrier plants because they act like machines to produce fruit. So we have to measure them at cost less depreciations. On the other hand, the FFP growing on them are biological assets under MFRS 141 and must be measured at fair value less cost to seed. Distinction is important for faithful representation so investor can see the true long-term versus short-term value of our assets. Let's move to the question B. Our group evaluated the CFO's valuation method. The CFO used the full market price of 650 ringgit per ton to value the immature FFP. However, this approach is not appropriate because it does not follow the qualitative characteristic of faithful representation under the IASB conceptual framework. The valuation is biased and does not reflect the actual condition of the immature FFP.
Unlike harvested FFB, immature FFB are still growing and cannot be sold. They are also exposed to biological risks such as bad weather, disease, and poor growth. Therefore, the company should not use the full market price. Instead, the valuation should include a discount or risk adjustment to reflect the immature stage of the FFB and the uncertainties involved. Complying with the CFO instruction to overvalue immature biological asset is a clear ethical breach. It compromises my integrity and misrepresents our financial position to strategic investor. My strategy is to first document the correct accounting treatment and present this finding to the CFO professionally. If this fails to rectify the situation, I am obligated to escalate the matter to the audit committee to protect the company integrity. Ultimately, my primary duty is to public interest. I must ensure our financial statement offer a faithful representation of the company health rather than participating in the intentional inflation of asset to secure an investment. Thank you.
Assalamualaikum. My name is Ala Dayana binti Muhammad Mustaqim with metric number 313689. For the real estate and property divisions, we evaluate the CFO's proposal to classify all properties as investment property under MFRS 140. We conclude that this blanket approach is technically incorrect and violates the principle of faithful representations. The correct classification is we must classify this based on the economic usage. For property 1, this must be split. The retail floors are under MFRS 140, which is investment property, because they are held for rental, while the corporate headquarters must be MFRS 116 under 1 PPE because it is owner occupied. For property 2, this is correctly under MFRS 140 as investment property as it is held for capital appreciation. For property 3, this must be MFRS 102 under inventory because it is being developed for the sale in the ordinary course of business. In conclusion, applying the fair value model to all assets is an attempt to artificially inflate reported earnings. By applying the correct standards, either it's MFRS 140, 116, and 102, we ensure the financial statement accurately reflects the company true asset base.
Assalamualaikum and hi everyone. My name is Aina Safra binti Muhammad Safa Yusmi and my metric number is 312925. Regarding to the question 2B, the initial and subsequent measurement basis for each property must strictly follow their correct MFRS classifications. For property 1, the 7 lease floor under MFRS 140 can use the cost or fair value model, while the 3 HQ floors under MFRS 116 use the cost or revaluation model. For property 2 under MFRS 140 can also adopt the cost or fair value model. Meanwhile, property 3 under MFRS 102 must be measured at the lower of cost and net realizable value. Next, our team strongly finds that the CFO blanket proposal to apply the MFRS 140 fair value model to all three assets severely violates the qualitative characteristic of faithful representations under the conceptual framework. By classifying residential inventory under constructions and owner-occupied office entirely as investment property, the CFO is misrepresenting the economic substance and management's actual business model for those assets. This approach artificially inflates the group's asset base and create unrealized paper profit in the profit or loss simply to look favorable to the potential investor. This directly compromises neutrality and prudence, leading to highly misleading financial statements. Thank you.
Good morning everyone, my name is Shazwa Ashira binti Shaiful and my metric number is 313675. Today, I will explain the accounting treatment for fresh taste food manufacturing berhad under MFRS 137. First, regarding the product recall cost, the company should recognize a provision. This is because all three recognition criteria are met. There is a present obligation caused by the sale of contaminated products. It is probable that the company will incur recall and composition costs, and the amount can be reliably estimated. Therefore, the company should recognize a provision of 100,000 ringgit Malaysia, which is the base estimate. Next, for the consumer lawsuit, the company should not recognize a provision. Although there is a legal claim, the legal advisor estimates only a 30% chance that the company will lose the case. Under MFRS 137, a provision is recognized only when an outflow of economic benefits is probable, meaning more than 50%. Therefore, this lawsuit should be disclosed as a contingent liability instead. In conclusion, uncertainty is important under MFRS 137. If an outflow is probable and can be estimated reliable, a provision is recognized. Otherwise, it is disclosed as a contingent